Time for your call sheet. Crew members today, Chief Economist Veronica Clark, Carson Group Chief Market Strategist and CNBC contributor Ryan Dietrich, and on set with me, Jones Trading Chief Market Strategist Mike O'Rourke. Lots to get to, as is always the case. Mike, I'm going to kick this off with you. Fed fireworks. What was your takeaway from a brand new Fed chair ushering in a brand new era at the Fed and day one with a stock swoon?
I mean, it was pretty remarkable. Kevin Warsh showed that he will be independent. It's something that we've been waiting for a long time. I think the most interesting takeaway was when they asked him about where does he think about where monetary policy is today. He said it's broadly restrictive, but except in the financial markets. So that is obviously that helped add to the sell-off, and I think that's something people need to be aware of here.
Yeah, and he's not necessarily wrong either. I think Main Street has a very different felt a very different impact than Wall Street has. That's for sure. Ryan, your thoughts, takeaways from the Fed yesterday?
Well, first off, thanks for me back, and good morning, everyone. Enjoy the long holiday here, and congrats on the win with the Knicks. Everybody enjoy that today. So you think about it, Morgan. I mean, yesterday, you guys have talked about it all morning. I want to talk about the market's reaction, right? Almost 430 stocks in the S&P 500 were down yesterday. That was the most number of lower stocks we've seen all year since the last day of last year. Usually you have a bigger down day when that many stocks are lower. So that kind of caught my attention. But one more thing. You have to go back like to 1978 when Volcker took over. The last time stocks were higher on the first Fed meeting. So it's normal to see some kind of confusion and actually big weakness on the first Fed meeting. So I'm not overly shocked by that. I think the bottom line, this is still a bull market. We still have a lot of participation. Last comment, just 2 days ago, the New York Stock Exchange advanced decline line hit an all-time high. Small cap advanced decline line hit an all-time high. Mid cap was right at an all-time high. This is still a broad-based rally. Yeah, some weakness right here might make sense, but we're not overly concerned.
Yeah, Veronica, I want to get your thoughts on this, especially given the reaction we saw in the bond market. I mean, you had a split Fed in terms of the dot plot, and that strips out Warsh, who didn't put his dot plot in, I think, as to be expected. But the surge we saw in the 2-year Treasury yield, how to think about that?
Yeah, no, it was a hawkish surprise, of course, but it's still a very divided Fed, and we've seen that before. So I think the most hawkish element of the meeting and why we saw that move higher in 2-year treasuries is that we had a lot of officials expecting that they're going to be hiking rates this year. A lot of people placed a dot for 1 or more, someone even expecting maybe 3 rate hikes for the year. So markets, of course, are reacting to price in some of that risk. But I would say, and Warsh said this in the comments at the press conference, that these are very rough forecasts. They're penciled in with pencil, and they could change.
Yeah. Speaking of penciled in with pencil, we got Warsh on one hand, Mike. We got war on the other. We got this MOU signed by President Trump and his Iranian counterpart last night. Devil's in the details here over the next 60 days, including what happens with the Strait of Hormuz, because it's just a toll-free, fee-free agreement with Iran for the first 60 days. Then we don't know what happens.
Yeah, I mean, it's going to be interesting to see how the summer plays out here. Once again, we're rallying on this memorandum of understanding, in the stock market. And I think we've priced in these gains multiple times at this point. And the reality is we need to get to a final resolution here and move on from this conflict, hopefully. I actually think if we can move on from it, I think it's very bearish for oil. Oil had very bearish fundamentals to begin with, and that does lead, we will get inflation to come down with oil correcting. So it'd be great to move this process forward and get to a final resolution here. Yeah,
Veronica, I want to get your reaction to that, because, I mean, we have seen oil drop like a rock here this month, and Brent is, last I checked, below $78 a barrel. So how does that contribute to the forward-looking inflation picture?
Yeah,
well,
absolutely. Headline inflation.
Veronica, and then I'm going to come to you, Ryan.
Sorry. Yeah, no, absolutely. Headline inflation is looking better. I think as soon as June, we'll see that look better. It's still elevated, of course, on an annual basis, but it is, a good development that has come down. We've seen some pass through to core inflation, things like airfares. But if businesses do perceive that this increase in transportation costs and energy costs was only temporary, we really haven't seen the pass through of that to other types of goods and services. And maybe we don't get that if businesses can just absorb those costs for just a couple months. So it is a really important element for the inflation outlook if oil is coming down.
Okay, Ryan.
Sorry, Veronica. You think about it with inflation. I think what Apple just said is really telling, right? They said, listen, things are costing more. We have to increase prices. I mean, I've been coming on with you all year, Morgan, saying we thought inflation's broadening out. It's not just about services, not just about goods. They really are broadening out. That's not the end of the world. I mean, let's just remember, we think interest rates are going to stay higher. At the start of this year, everybody said, how many cuts will there be? We always said, I'm not so sure. Now we're saying, how many hikes could there be? Once again, we're kind of taking the other side of that. We think the Fed will be a little bit more dovish going forward, even amongst an inflationary growth environment with an economy that, what have we been seeing just lately, right? Manufacturing better, services better. Everybody knows how strong earnings were. Oh, and the labor market that's really turning the corner. So all in all, we think the Fed will be net dovish from what's expected right now, and that'll probably still be a positive amongst an inflationary growth environment.
Okay. Mike, you know where we are seeing some price increases? Apple. Tim Cook making comments to the Wall Street Journal about this yesterday, given the surging cost of memory and some of the other chips that they need to make their devices. Even as President Trump is announcing that there is this deal to do American semiconductor manufacturing for Apple with Intel.
Yeah, I mean, again, it's interesting. Intel's up almost 10% on this announcement. It's been reported in the past that they're going to do a deal with Apple. So I'd say it's probably not really new news here, but that just shows the froth in these markets right now. There is a lot of speculation going on. There is a lot of risk. And that's something you need to be cautious about, especially with the Fed. That's showing that they're going to be a little more conservative going forward, and it's not going to be an easy monetary policy environment just for the sake of pushing financial assets higher.
Yeah, I mean, speaking of froth, just look at the company formerly known as Allbirds diving into AI infrastructure. Everybody's diving into AI infrastructure, but AI infrastructure is propelling the economy, Veronica. So how to think about that and the role that reindustrialization and redomesticating chip production could actually play longer term in the economy.
Yeah, no, it is a huge driver of growth right now. If you break out the AI-related components of GDP, things like investment in computers, information processing, data center build-out, that is really the main driver of GDP growth the last 2 quarters.
Okay.
I mean, I'd say one issue is, that does mean the broader economy is very susceptible to any sentiment shift. And I think that's what worries me a bit. But yeah, this is a technology that's going to potentially be productivity enhancing longer run.